Okay, everybody, I'm back and I'm coming off of an episode I called The Cash Trap, which struck up quite a bit of conversation, to say the least. And these are somewhat related because today we're going to be digging into the world of risk management for you on your projects. And the type of contractor that you hire is a direct reflection of who they are, the integrity that they have, and really the related insurance that they have. And that's what we're going to dig into. So let's start with the uncomfortable part because everything else today is built on it. Up to now, let's say you've done this right. You've designed your project, you compared bids, you signed a real contract, the kind we spent the last few episodes building. And then one morning the crew shows up and your property fills with people, crew members, subcontractors, suppliers, a delivery driver you've never seen before backing a truck up your driveway. And here's the question that practically nobody asks: who's responsible for every one of these people while they're on your land? Most homeowners assume the answer is simple. If somebody gets hurt, that's the contractor's problem. They've got insurance. And when everything is in order, that's true. But construction has a hard little rule underneath it. And it goes like this: when something goes wrong and there's no valid coverage to catch it, the law goes looking for the person with the assets. On your project, that person with assets is you. And I want to connect this straight back, like I said, to the last episode, because there are two halves of the same story here. Last time we talked about the contractor who offers to knock 10% off if you pay in cash, the discount that feels like found money to you. And we said that discount gets funded partly by a contractor who isn't paying for their insurance, likely. Well, today is the day that bill comes due. The cash trap didn't end at the cash. This is where it actually bites. Now, last episode struck a nerve. Some of you cheered it, and some of you pushed back pretty hard. And I read all of it. The vast majority of contractors are good people running honest businesses. And they carry every policy we're going to be talking about today. This isn't about painting the trades as villains. The honest contractor actually wants you to do this because every time a homeowner verifies coverage, it levels the playing field against the few who are cutting corners and underbidding everybody by skipping the very protections that keep you safe. When you verify, you're not insulting the good ones. You're protecting them too. The trouble is, you cannot tell the honest from the cutting corners by looking, so you verify every time. So let me be straight with you about the stakes, because I've seen this up close. Construction is genuinely one of the most dangerous kinds of work there is. People fall, things collapse, heavy materials move, and when a serious injury happens, the medical bills and the lost wages add up to 6 figures in a real hurry. That number doesn't disappear. It has to land somewhere, and it lands on whoever forgot to check. The entire job today is making sure that's never you. So here's what I promise you in the next half hour. First, why you can end up on the hook in the first place. Second, the 2 specific kinds of insurance that stand between you and that bill, and what each one really does. And third, the part that actually protects you. The exact steps to confirm the coverage is real and current, not just claimed. So let's get into it. So let's begin with why you're exposed at all, because once you see it, you really can't unsee it. And that's a good thing. So start with the assumption I just mentioned, the one that costs homeowners the most. Their insurance covers it. That sentence is only true under 3 conditions. The coverage has to actually exist. It has to be current, not expired, not canceled, and it has to reach the specific person who got hurt. Knock out any one of those 3, and the protections you were counting on simply isn't there. It was never there. You just believed it was. In the cash conversation from last episode, that's one of the most common ways that coverage quietly disappears before you ever find out that it's missing. Now, here's a principle nobody mentions when you sign your contract: premises liability. In plain English, it means this: as the owner of the property, you owe a basic duty of care to the people working on your land. You're expected to keep the place reasonably safe and to warn workers about hazards you already know about. If you know that back step is rotten or that second floor railing is loose and you say nothing and somebody goes through it, that can land on you. The law treats a worker you invited onto your property as somebody you owe real care to. That's not a technicality. That's the foundation of how these claims work. There's a wrinkle here that actually works in your favor if you understand it. The more you direct and micromanage the crew, the more responsibility you can quietly pull onto yourself. If you're out there every day telling people how and when to do their jobs, standing over their shoulder, the court can decide you took on the duty to keep them safe. It's happened. You stepped into the contractor's shoes. But if you step back and let a competent general contractor run the site, which is literally their job, you could genuinely lower your own exposure. That's one more reason a real general contractor earns every dollar of their fee. You're not just buying their schedule and their crew, you're buying a buffer between you and the work site. So resist the urge to play foreman. It feels like control. It's actually risk. So premises liability is the doorway. Now let me show you what walks the bill through it. It's called the prime contractor rule, and here's how it plays out. A worker gets hurt, and there's no workers' comp standing behind them. The question becomes brutally simple. Who pays? In most states, the responsibility rolls right uphill, up the chain of the contractors. The injured worker's claim looks for the nearest party who's supposed to be carrying the coverage. And if there's no insured contractor in the chain to absorb it, because the guy who hired the crew was paying cash off the books, then it can roll all the way up to the property owner, to you. You didn't swing a hammer. You didn't hire that specific worker. It doesn't matter. The chain ran out of insured people before it ran out of the road, and your house was sitting at the top of the hill. And the last episode really triggered a lot of people, and everybody, all of the people that were adamantly against the episode about taking cash for contract, were focused on the taxes because they were focusing on themselves. But what about focusing on the client and their employees and making sure that everybody's cared for and protected? That didn't get talked a lot about in all the comments. So this is what I'm here to do today, is to expand on, it's not just about saving money because you're not paying taxes. It's about protecting the people around you. Now, a lot of folks hear that and think, fine, but I've got homeowners insurance. That's my backstop. And I have to be honest with you, often it isn't. A lot of homeowners policies specifically exclude injuries tied to business or construction work. There's language buried in there that says, in effect, this policy is for your life, not running a construction project. And even when your personal liability coverage does kick in, the limits are usually modest. We're talking about a couple $100,000 at most against an injury claim that can run well past that. Guess who owes the difference? You do, right out of your pocket. I've watched that search for who pays end at the homeowners more than once. The injured worker's attorney follows the money, and the money is your house. And I'm planting a flag on this because it's exactly where we pick up the next episode. Your own coverage and the gaps in it that nobody warns you about. So let's lock this in. If a worker is hurt and no valid coverage reaches them, the law looks for the party with the assets, and that can be you. That's the exposure. Now, the good news. There are two specific policies built to stand in front of all of it. So let's meet the first one, liability insurance. So liability insurance is the one most people have at least heard of, and even if they've never read a single line of an actual policy. So let's make it concrete, what it covers, where it really has teeth, and the catch that surprises almost everybody. Think of general liability as the policy that answers for the damage and the injury the contractor's work causes to other people and their property, not the workers themselves. We'll get to them in a minute. That's a different policy. This one is about other people, your neighbor, a passerby, a guest, their stuff. A few things you should know about how it's built. These policies commonly start at $1 million of coverage. And I want you to hear that the right way. $1 million is the floor for a serious operation, not some gold-plated luxury add-on. It typically responds to a handful of things: accidents and injuries, contractual liability, that's the promises they made in your contract, liability for events caused by an employee or a subcontractor, and the products and the work the contractor produces. So it's broad on purpose because a job site generates a lot of different ways for things to really go sideways. So let me put it at the scale of your actual project. Your demolition crew is tearing out an old patio, and in the process, they crack your neighbor's retaining wall. Real damage, real money, and now your neighbor is involved, which is its own kind of nightmare. With liability coverage, that's a claim. The insurer handles it, the wall gets fixed, life goes on. Without it, that's a lawsuit, and it's aimed at whoever's standing closest with the deepest pockets. Often that's the homeowner who hired the uninsured crew. You wanted a new patio? You got a lawsuit from next door. And here's another one. A worker carrying a load of lumber clips your neighbor's parked car and caves in the door. Small thing, still a claim. Multiply those little incidents across a months-long project with a dozen people coming and going, and you start to understand why a serious contractor wouldn't dream of working without this policy. And one practical note while we're here, the bigger your project, the harder you should look at the actual number. $1 million in coverage is plenty for a bathroom remodel, we'll say. But if you're putting up a whole second story, heavy equipment, a big crew, months on site, it's fair to ask whether that limit really fits the scale of what you're building. A serious contractor won't be offended by the question. They'll respect that you understand what their policy is actually for. Now, here's the part of liability insurance that most homeowners never think to ask about. A good policy doesn't just cover the accident in the moment. It can cover the finished work itself long after the crew has packed up and cashed that final check. The industry term is completed operations, and it matters a lot more than it sounds because some failures don't show up for months. The work looks beautiful at the final walkthrough, everybody shakes hands, the job is done, and then you've heard this one in spirit before. Picture a brand new deck, gorgeous for 6 months. Then one evening, it's full of people at a backyard party, and it collapses, and guests are hurt. Completed operations coverage is the thing that answers for that. Without it, those injured guests go looking for someone to cover their medical bills, and they find the homeowner because it's your deck and your party. So when you're evaluating a contractor's coverage, you're not just asking, are you insured today? You're asking a bigger question. Will there be a policy standing behind this work after you're long gone? That distinction has saved people's life savings, which brings me to the catch. And it genuinely surprises people. Most folks assume liability insurance is simply required by law for contractors everywhere, full stop. In a whole lot of places, it just isn't. Plenty of states do not require general liability as a condition of holding a contractor's license. Some leave it entirely up to the cities and counties, so it depends on which side of the line on the map your project sits. Others do tie it to licensing, and many serious contracts demand it regardless. It's a patchwork, and you cannot read that map from your living room couch. I've worked in places where the state basically shrugs about liability insurance, and places where it's absolutely mandatory to even pull a permit. And the lesson from all of it is the same. You cannot count on the rules to protect you because the rules change at the county line. So the takeaway here is clean, and it's yours to act on. If your state won't require it, then you require it. Make written proof of liability coverage a flat condition of getting the job. No proof, no contract. The good contractors will hand it over the same afternoon. The ones who stall you just told you something really, really important. So liability insurance, it covers the damage and the injury the contractor's work caused to others, commonly starting at $1 million. And the good policies cover the completed work itself. But it's not required everywhere. So a smart homeowner requires it by contract. So now let's turn to the policy that does the most to protect you personally, even though your name is nowhere on it. Workers' compensation. So liability insurance covers what the contractor's work does to other people. Workers' compensation covers what happens to the people actually doing the work. And here's a twist that I really want you to hold on to. Workers' comp is the policy that ends up protecting you the most, even though it's got the worker's name on it and not yours. So let me explain how. Workers' comp pays an injured worker's medical bills and their lost wages when they get hurt on the job. And nobody has to stand in a courtroom and prove whose fault it was. It just pays. So unlike liability insurance, most states actually do require contractors to carry it. Texas is the well-known exception for private work, but almost everywhere else in the country, it's the law for anyone with employees. Now here's the quiet part, the part that protects you specifically. When a covered worker gets hurt, comp pays, and in exchange, that worker gives up the right to sue. Read that again because it's the whole ballgame. They give up the right to sue. So take that comp away and you've torn down that wall. And now there's nothing keeping that worker or that worker's attorney from looking straight at your house as the next deepest pocket. So when I tell you construction is dangerous work, I'm not being dramatic really here for effect. A serious fall, a bad cut, a back injury, those run into six figures fast between the surgery and the months of lost income. Workers' comp is the wall that keeps that number from ever becoming yours. And let me show you the math that the corner cutter is running, because it explains everything. A workers' comp policy in a real crew is one of the bigger line items an honest contractor carries. It costs serious money every month. So when somebody skips it, that saved premium is exactly what funds the lower bid that looks so attractive. You're getting the same job with the safety net quietly pulled out and the savings handed to you as bait. The premium didn't vanish. The risk just got moved onto your property. And one more thing worth knowing, because it shows you how seriously this industry takes this. Many insurance companies audit general contractors every single year to keep tabs on their risk, counting heads, checking payroll, making sure the coverage matches the bodies on the job. The industry treats this as life or death serious. You should too, which is exactly why some contractors work so hard to avoid paying for it. Comp isn't cheap, and skipping it is the fastest way to underbid an honest competitor. And they've gotten clever about hiding that they've skipped it. So here's the move to know about. When you check a contractor's status with the state board, you'll sometimes see they've claimed they have no employees. And that can be perfectly legitimate. A contractor really can subcontract everything out and genuinely have no employees of their own. So sometimes no employees is just the honest truth. But a lot of the time, it's the oldest dodge in the book. It's a contractor paying his workers cash off the books so he doesn't have to carry a comp policy at all. And if that sounds familiar, it should. That's the exact cash trap behavior we talked about in the last episode. Remember that discount that felt like found money? This is where the money came from, and this is the bill it was hiding. If a contractor isn't running payroll, he isn't paying workers' comp, and that unpaid risk is sitting right there on your property, wearing a tool belt and standing on a ladder. And it gets one layer trickier, so stay with me here. Because comp premiums are expensive. You'll see contractors subcontract the labor out, and then those subs subcontract it out again. By the time the work actually gets to the person on the roof, sometimes everybody in the chain is a sole proprietor with no employees and no coverage. Everyone's technically exempt. Everyone's uninsured. And if one of them falls, the search for the deepest pocket runs right past all of them and stops at you. Now, the rules are starting to catch up with that dodge, and where I work, they just changed. So let me give you a fresh one because it tells you which way the wind is blowing on all of this. The start of 2026, California now requires every licensed contractor to carry workers' comp on file with the state board, even the ones who claim they have no employees. They deliberately closed that no employees loophole, slammed the door on it. The state basically said, we're tired of this game. And even if you're nowhere in California, I want you to treat this as the direction of travel for the whole country. The I have no employees answer is no longer something you nod along to. It's a cue to ask one more question, not to relax. I keep an eye on these rule changes because they tell you where the real risk lives. And this one closes a door that a lot of homeowners didn't even know was standing open. So workers' comp pays an injured worker's bills, and crucially, it keeps them from suing you. Most states require it. The no employees claim is often a cash under the table dodge. And the subcontracting chain can hide a whole crew of uninsured people, but California's 2026 rule now closes that loophole here. But knowing all of this is worth exactly nothing if you just take the contractor's word for it. So let's make you dangerous. Here's how you verify the coverage is real. This is the part that turns everything we've covered into actual protection. 4 moves. None of them are hard, and any contractor running a real business will pass every one of them without blinking. The ones who get squirmy, they're telling you something for free. Let's make you the homeowner who checks. So move 1, ask 3 questions. Now, don't apologize for it. You're not being rude. You're being a professional. And a good contractors respect a homeowner who does this, the good contractors. A little bit of friendly interrogation up front buys you instant transparency. Question 1, do you subcontract all of your work? Let them answer fully. Then gently, I noticed you claim no employees on the state site, and I just watch how they handle that. A straight shooter explains it in 2 calm sentences. Someone cut out gets defensive or starts talking fast. Question 2, do you carry workers' comp? Now pause, let it breathe, then add, on all of your employees. That little pause does more work than any clever question you could ask. Silence makes people fill it, and what they fill it with tells you a lot. Question 3, if I select you, can you have your agent put your policy on an insurance certificate for me? A real contractor says, of course, it's a completely normal request. They've done it 100 times, and their agent can do it in their sleep. Their answer points you to the one piece of paper that actually matters, a certificate of insurance. A certificate is a document that turns a promise into proof, only if it has the right things on it. It must list the insured party, the carrier, and the coverage amounts. And it should come to you directly from the contractor's insurance agent, not a screenshot they text you, not a photo of a year-old form they've got folded up in their truck, from the agent. Now, 2 things I want you to require on that certificate. First, that you are named as additionally insured with your property address right there on it. And then second, that the policy gets verified directly with the carrier. Hold that second one. It's the big one. So why additionally insured? Because being listed that way builds in an automatic notification to you if the policy lapses in the middle of your project. And that's a real risk, not a hypothetical one. Most policies run for 1 year, and your job might just outlast the coverage. You want to be the one who gets the phone call the day it expires or the notification in the mail, not the one who finds out after something's already gone wrong. But don't lean on that notification as your whole plan. Write the policy's expiration date on your own calendar and follow up yourself. Trust, but verify, and then verify again. And one more tell, straight from experience. A real insurance agent can produce a certificate in 24 to 48 hours. That's normal. If it's suddenly taking a week, 2 weeks, bank that. It can mean your contractor's candidate made a mad dash to go buy coverage right after you asked for proof of it. The delay is the tell. And you'll remember from a few episodes back, the certificate that got shown to a homeowner and then quietly canceled the very next week, the paper is only ever as good as the policy actually sitting behind it. And here's the move that catches the trap most homeowners never really see coming. Your general contractor is not the only person on your property. Every subcontractor on that site needs the same coverage, same liability, same workers' compensation. And it's the GC's job to collect a certificate from every one of those subs and to name themselves as additionally insured on each one, which down the line ends up protecting you. A good GC does this automatically. It's just how they run. This is just standard operating procedure for legitimate quality contractors. So ask plainly and look them in the eye when you do. Are all of your subcontractors properly insured? And when the time comes, can I get copies of their certificates? When they say, yes, of course, that's the right answer. Now you just have to confirm it's a true one. Then, and this is move 4, the one that actually closes the loop, you make the call yourself. You confirm the policy directly with the carrier listed on that certificate, not the contractor, the carrier. So let me tell you why this matters so much with a story that's happened to real people. A homeowner hires a roofing company. The salesperson shows up, shows a state license, shows a current certificate of insurance, workers' comp, and all. It all checks out at a glance, looks perfect. But here's what the homeowner didn't catch. The certificate only covered the company's office staff, the admin people, the salespeople. It did not cover the subcontracted crew that was actually up on the roof, because those folks were sole proprietors hired job to job with no coverage of their own. And then one of them fell badly, and the homeowner got sued for his medical bills and lost wages. The certificate was completely real. It just wasn't covering the one person who actually got hurt. That is why you call the carrier. You confirm the policy is active, and you confirm who it actually covers. Not just that a policy exists, but that it reaches the people on the ladder and the roof. A certificate you got from your contractor proves they own a printer. A certificate you confirm with the carrier proves they own a policy. So there's your verification, start to finish. 4 moves. Ask 3 questions. Get a certificate that names you as additionally insured with your property address. Confirm the subs carry the same coverage, and call the carrier yourself. Do those 4 things, and you've moved from hoping you're protected to knowing that you are. Do those 4 things, and you've moved from hoping you're protected to knowing you are. And honestly, you'll sleep better through the whole project for it. That's your protection, top to bottom. Let me pull it all together and point you to the free checklist that makes every one of these steps dead simple. All right, let's recap here, because this is really the stuff that protects your whole investment. 2 policies stand between you and a disaster. Liability insurance for the damage the work causes to others, and the completed work too. And workers' comp for the people doing the work, which is quietly the policy protecting you the most. Neither one helps you if it isn't real and current. And the homeowner who verifies the 3 questions, a certificate naming you as additionally insured, are the subs covered, and a call straight to the carrier. That's the homeowner who stays protected. And that's the homeowner who keeps the honest contractors honest. So to make every one of those steps dead simple, I put together a free 1-page checklist. It's kind of like an interactive little tool that you can free download, and it gives you the questions to ask. Exactly what has to be on the certificate, and how to confirm it with the carrier. It's free, and the link is right here in the show notes. So you'll find everything else there too, the book, and all the ways really you can reach me. And if you want the deeper version of the verification steps, there's always the book, The Awakened Homeowner title, available in Amazon. And I walk you through an entire process to be thinking about how to think about planning your project. And I always love to hear from you. So has a contractor ever looked you in the eye and told you he has no employees? I want to hear how that went and what your gut told you in the moment. Email me at the address in the show notes, or come find the conversations over on Facebook, which has been very entertaining and informative about what people are really thinking out there. And I read every single one of those comments. I try to reply to them all, although they're getting quite numerous. And and there's cheers and there's pushback both. And you can probably imagine who the pushbacks are from. And here's where we're headed next time. Today was all about making sure they're covered. Next episode, we'll flip it completely, and we'll look at the insurance that you actually carry, because this is what most people get wrong. Your homeowner's policy may not cover your home in the middle of a renovation. There's language in there about vacancy, about business activity that can leave you exposed at the worst possible moment. And the second you bring your own person onto that job, your own roofer, your own handyman, the liability quietly becomes yours. That's builder's risk, and that's your own coverage, the other half of protecting yourself. And you won't want to miss this, because this is basically bookending the risk management of your project and yourself. So there you have it. I'm Bill Reid, your home building coach. And as always, I'm here to enlighten, empower, and protect you. So let's go make it happen.